Look at a few different analyses that have come out that are examining Bitcoin's recent surge. We'll take a look at that from Market Insider's perspective. 5 different theories behind Bitcoin's dizzying rally above $12,000 here on moneycontrol.com. Bitcoin expected to reach 50K, tops 12K for the first time since January of 2018. And Forbes, one of our favorite publications, at least when they speak favorably of crypto, is talking about how BitMEX volume has hit $11 billion. That's simultaneously as Bitcoin nears $14,000. Is retail demand coming back? We'll take a look at what they have to say. But let's begin here with a snapshot of the market. There has been a retracement since yesterday, since all the exuberance. Bitcoin down, actually at this point down only 3.3%, but that's going to increase just based on the 24-hour window and the way that that's calculated. It's down at about $12,000 right now. It was higher than 13K at certain points. As you can see, some of the altcoins are suffering even more. Ethereum down 6%, XRP down 10%, Bitcoin Cash 12.7%, Litecoin down 12.6%, EOS down 12.5%. Bitcoin SV skipping ahead down 14.2%. So there have definitely been some casualties here. Everybody follows the big daddy. Everybody follows Bitcoin. And when we rise quickly, we fall quickly. That seems to be especially pronounced in the case of some of these altcoins, at least today. So that's what's happening. That's the snapshot. We're sitting at a total market cap of $342 billion. That's down from about 370 or so billion that we saw yesterday, down 6%. In the last 24 hours. Here now on markets.businessinsider.com, 5 theories behind Bitcoin's dizzying rally above $12,000. So Bitcoin has tripled in price in under 3 months, from about 4K at the start of April to 12,500, now more like 12,000. The cryptocurrency has surged by more than a third in the past week, and rising mainstream interest, geopolitical tensions, expansionary money policy, a supply cut next year, and Bitcoin whales may be responsible. So reason number 1, Bitcoin and cryptocurrency especially are going mainstream. Bitcoin is benefiting from broader interest in cryptocurrencies. Facebook, of course, partnered with Visa, PayPal, Uber, Spotify, and other companies to launch Libra this month, as we have covered, a digital coin intended to simplify online payments and purchases. Asset manager Fidelity has begun buying and selling Bitcoin for institutions. Online broker TD Ameritrade rolled out trading of Bitcoin futures in December, and securities brokerage E-Trade is close to introducing cryptocurrency trading to its platform. Reason number 2, Bitcoin is being seen, at least by some, as a safe haven. America's trade war with China and disputes with Iran, Mexico, Germany, and other countries have spurred investors to buy Bitcoin as a way to diversify their portfolios. Quote, as the geopolitical situation remains so uncertain, strategic investors are still looking at Bitcoin and Ethereum as uncorrelated with centralized assets. So they provide a quasi-safe haven option. That's courtesy of Marcus Swainpole, CEO of Luno, a cryptocurrency platform. Reason number 3, central banks may be juicing Bitcoin demand. So the European Central Bank's commitment last week to cut interest rates and purchase assets as necessary to protect the Eurozone economy, and the Federal Reserve's hinting that it could cut rates as soon as next month, may be fueling demand for cryptocurrencies. And reason number 4, there's a supply cut coming next year. We've talked about this. This is the infamous halving that's occurring in 2020. So the Bitcoin payout for miners for discovering new so-called blocks of Bitcoin started at 50 Bitcoins, but of course automatically halves every 4 years to combat inflation. The reward will fall to 6.25 Bitcoins in May of 2020. That's according to Forbes. So those are a few good reasons why I think we're seeing the 20K. They're a little bit general, a little bit vague. I think there's a lot of stuff happening at the same time. So it's a convergence of different factors, but for good reasons here nonetheless. Here on moneycontrol.com, Bitcoin expected to reach 50K, tops 12K for the first time since January of 2018, a year and a half ago. According to analysts, the sudden surge in price is due to a renewed interest in virtual coins after Facebook launched its own digital unit Libra. According to a study they conducted, leading crypto trading platform Binance said Facebook's Libra would have a massive impact on global economies. And then you have Bitcoin bull Tom Lee, who said Facebook had brought cryptocurrencies to the mainstream. He told CNBC that Bitcoin was moving, quote, deep into a bull market. According to Lee, Bitcoin is on its way to break its previous all-time high and reach a much higher point of about $40,000 in 2019. Then you have some people that are calling for even higher highs of about $50,000. An unidentified buyer, for example, bought 30 call options at New York-based crypto marketplace Ledger X on the 23rd of May. The trader spent $4,500 on the options to be expired in June of 2020, which would allow him or her to buy Bitcoin at $50,000, and that's according to the Wall Street Journal. So this means that the trader is going to lose the $4,500 if Bitcoin does not reach $50,000. However, if it does reach $50K, the trader will earn significant profits. Well, I hope for their sake they got the bet right, but $4,500 is not exactly the biggest whale movement I've ever heard of, so I don't know if this warrants its own coverage, to be perfectly honest. If you'd like to check out the rest of this article, we will link to it, of course, in the description below. Let's move on now to Forbes.com and talk volume. BitMEX volume specifically, which just hit $11 billion as Bitcoin neared 14K. Again, it's back down a little bit now, but it did near 14K yesterday. Is retail demand coming back? Investors like over-the-counter crypto trader Yingfeng Xiao and JP Morgan analysts have attributed the recent surge in the Bitcoin price to the noticeably increasing institutional interest as seen in the numbers released by digital currency groups Grayscale and the premiums on crypto-related investment vehicles such as Bitcoin Investment Trust GBTC. With Google Trends indicating that the mainstream interest towards Bitcoin remains relatively low when compared to the interest seen in 2017, there are expectations that the current upside movement of Bitcoin could be the start of a larger wave of capital inflow. I think that's a very good argument, actually. According to Arthur Hayes, he's the CEO of BitMEX, the most widely utilized crypto margin trading platform in the global market. The daily volume of Bitcoin on BitMEX has surpassed $11 billion and is nearing $12 billion as the demand for the dominant crypto asset has intensified. The real 10, we've talked about that, volume of Bitcoin, which refers to the verifiable daily volume of Bitcoin coming from exchanges regarded by Bitwise Asset Management for having a legitimate daily volume of over $1 million. So that real 10 volume for Bitcoin is also nearing $5 billion for the first time in 2019. At its low point in March, the real 10 volume of Bitcoin hovered at around only 500 million. According to OTC trader Yingfeng Xiao, the recent crypto market rally has not been triggered by the inflow of new capital. Xiao said, speaking to CoinDesk, quote, "The question is, where is the money coming from?" And I think my take on it is that until you can prove to me that new retail money or new institutional money, this is sort of a large pool of funds that is just sloshing around inside the space. Then people who already put some money into the space are behind the rally. And just to close off the article here, while it may be far-fetched to claim that the US-China trade war has been a catalyst of the upside movement of Bitcoin, some strategists foresee the rising price of the asset as a point in which the global financial market is demonstrating a sign of uncertainty, allowing Bitcoin to become more compelling to a broader market of investors. Let us know your thoughts about the geopolitics of what's happening today especially between the US and China, certainly, but other countries as well. If you feel that there's a discussion to be had, let us know your thoughts in the comments below. I think at the end of the day, really what is important though is volume. And just going back to CoinGecko.com for a second, here is a snapshot. I have this window that's been brought up. So all of the activity, this is the total cryptocurrency market cap between January of 2017 and today. And this is a very, very crude perspective that I'm taking. I'm not going into this with any sophistication, but just at a glance, I mean, and it's been a while since I've checked out some of these volumes, but if you look at January of 2018, we had volume in the range of $34 billion. Would you take a look and just see how much we've increased actually in terms of volume in recent weeks and recent months? Back in April, we had $50 billion of daily volume. Back in May, we had almost $75 billion in volume, and the numbers seem to be rising. They seem to be trending in the upward direction. I know that's a very crude, a very coarse look at things, but I am of the opinion, as is Mark and as are others on the team, that volume represents utility, represents adoption. So that's an encouraging sign to me. I'm happy to see that BitMEX has hit a new mark, $11 billion in daily volume. Let us know your thoughts about that in the comments below. And that about wraps it up, everybody. Do be sure you're following us, of course, on all the regular social media channels, and keep checking back into our website, altcoinbuzz.io. Hey, if you enjoyed this video, go ahead, like, subscribe, share, hit the bell to receive notifications. Best of luck if you choose to invest on this Thursday. Members of the Altcoin Buzz Army, we do hope